Hi, and thank you for joining us here at Tax Talk UK, where we talk about all things tax and other important aspects of working for yourself, being self-employed, running a small business. So following on from the information that we gave recently about the changes and the delays to making tax digital for ITSA, we have been asked by a lot of people, what should we be doing in light of the changes? So that's what we're going to talk about today. Before I talk about that, if I could ask you please to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you should need to, as well as finding other information that we have available on a whole host of topics, all aimed at supporting you and making you more successful in your self-employment. So back then to making tax digital. So as we've talked about a lot before in terms of making tax digital, so making tax digital effectively means keeping your records digitally and submitting the information to HMRC digitally. So if you are using software to keep your records, and that is making tax digital compliant, then really that is what you need to be doing in preparation. If you are registered for VAT, most people now who are registered for VAT, whether over the threshold or voluntary registration, unless you are exempt from meeting the requirements of making tax digital, are now needing to submit their records digitally and comply with the requirements of making tax digital. As you will also probably hopefully remember, if it applies to you, so making tax digital for sole traders and private landlords, effectively making tax digital for income tax self-assessment, often referred to as MTD for ITSA, was originally due to start this year, April 23, and had been delayed until April 24. And that was, if you remember, to apply to anybody with an income over £10,000 for either self-employment or as a sole trader or as a private landlord. So recently, as you'll remember if you watched our video, HMRC further delayed that start date to April 2026. But they also increased the threshold. So now from April 26, if you have either income from as a sole trader or income as a private landlord, and that is over 50,000, then you will need to comply. So that obviously makes a big difference to the level that you will have to comply with the making tax digital requirements, with that threshold increase to 50,000. And if the income is over 30,000, then you will need to comply from April 27. And that currently is as far as HMRC have announced. So currently, if your income is less than 30,000, then you there's no date as to when you can expect to need to comply with making tax digital for ITSA. It's important to note that the thresholds apply to each source of income. So if you had, for example, income of say 20,000 as a sole trader and 20,000 as a private landlord, then neither of those alone reaches the threshold. If you had income over 30,000 as a sole trader, but income of under 30,000 as a private landlord, then again you would only need to comply with for the self-employment. And that can be important because if you are a sole trader and a private landlord and you need to comply with both, you will need 2 licenses. So you will need to pay for 2 software licenses. So it's important that you understand which you might need to comply with. Of course, there's lots of other benefits of using software for your records. So even though the time scale has moved further along, you may still want to consider starting to use the software, deciding which is right for you, and getting your records held digitally, as well as, sort of being, if you are going to have to comply, if you're going to be over the threshold, then you'll be there by the time comes. And I feel that it's important, if you are going to have to comply, if you start keeping your records digitally now, it means that by the time that you're obliged to comply with the requirements, you'll already be doing what you need to do. And as we know, with the MTD for ITSA, as well as having to keep the records digitally, HMRC will be expecting a quarterly report on your profit, on your sales and your expenses. So, but if you're already keeping the records digitally, then that won't really be any extra burden for you. If you, of course, leave it until the time that you have to comply, then that will put added pressure onto you, because you'll have to be learning it and making sure that it's 100% correct. If you start to do it now and you struggle, you could just maybe use the software for some elements and then build in more as you become more confident. You can progress at your own pace. And if all goes wrong and you don't feel confident with your records, then of course you can still do things manually. Whereas once you are obliged to comply, you won't have that option. So our advice is that although the timescales have changed and the thresholds have changed, please do consider the other benefits of making tax digital, predominantly using software to keep your records. And if you feel that they would be beneficial for you, then just sort of start as soon as you're able. So hopefully this helps, and thank you very much for watching. Goodbye.